Silver. At $115, the move nobody saw coming. Look at your screen, $115 per ounce. That's where silver closed today. And if you think you missed it, you're dead wrong. Because what I'm about to show you suggests we haven't even started the real move yet. 12 months ago, silver was trading at $30. Do the math. That's a 283% return in 1 year. While everyone was chasing AI stocks and crypto, silver quietly demolished everything in the market. And I mean everything. The S&P 500, up 18%. Bitcoin, maybe 40% if you timed it perfectly. Nvidia, the market darling, strong year, but nowhere close. Silver crushed them all. And most people completely missed it because nobody talks about silver. It's not sexy. It doesn't have a Discord server, but it made more money than all of them. Welcome back to the channel where we break down the financial moves that actually matter. Hit subscribe, drop silver in the comments, and let me show you why the next 60 days could define your financial future. The Fed's secret money printer. Here's what happened this morning while you were drinking coffee. At exactly 9 a.m. Eastern, the Federal Reserve injected $8.3 billion into the financial system. Treasury bill purchases. Sounds boring, right? Wrong. That $8.3 billion didn't exist yesterday. They created it, typed it into existence. And this wasn't a one-time thing. This is the third injection since January 20th. The Fed is now creating $45 billion every single month through something they call reserve management purchases. Let me break down what that corporate speak actually means. The Fed is printing $540 billion this year. That's not my prediction. That's their published policy. Bank of America confirmed it, Goldman Sachs knows it, and the smart money is positioning for it. Why the billionaires are buying. You know who else noticed? Ray Dalio, the guy who runs the world's largest hedge fund. He's been stacking gold and hard assets for years now, telling anyone who'll listen that cash is trash. Stanley Druckenmiller made billions breaking the Bank of England with George Soros. He's all in on hard assets and warning about currency debasement. And then there's Jamie Dimon, the CEO of JP Morgan Chase. This man has spent 50 years building wealth in dollars, and for the first time in his career he just said investing in gold is becoming rational. When the most powerful banker in America says gold makes sense, you should probably pay attention. The mathematical reality. Let me show you something that'll blow your mind. In 2005, the Federal Reserve's balance sheet was $800 billion. Today, $6.5 trillion. That's an 812% increase in 20 years. Now check this out. In 2005, silver was $7 per ounce. Today it's $115. That's a 1,543% return. Silver didn't just keep up with money printing, it demolished it by almost double. More Fed printing saw higher silver prices. The correlation is undeniable. And they just told us they're creating another $540 billion this year. What do you think happens next? The physical market is breaking. Last week, I talked to a coin dealer who's been in this business for 30 years, seen the 2008 crash, watched the 2011 silver spike to $50, lived through COVID. This guy has seen everything. He told me something that made me pause. In December, customers were offering him 20% over spot price just to get physical silver, not the usual 5% premium, 20%, and he still couldn't get enough metal to sell them. In 30 years, he'd never seen anything like it. People are waking up, they're scrambling, and the supply isn't there. The ratio that predicts explosions. Here's where it gets wild. The gold to silver ratio. Simple math. You divide gold's price by silver's price. Right now with gold at $500 and silver at 115s, that ratio is about 44 to 1. Historically, this ratio averages 50-60. But here's what matters. Every time this ratio compresses, silver goes parabolic. In 2010-2011, the ratio dropped from 70 to 32. Silver went from $18 to nearly $50. Almost tripled in 14 months. In 2020, the ratio spiked to 125 during COVID. Silver crashed to $12, then the ratio compressed and silver exploded to $30 in months, more than doubled. Now run the numbers on today's market. If gold stays at $5 to $100 and the ratio hits 30 to 1, silver goes to $170. That's 48% from here. If it hits 20 to 1, which has happened before, silver hits $255. That's 122% gain. But wait, those calculations assume gold stays flat. JP Morgan just raised their gold target to $5,500. Yardeni Research is calling for $6,000 gold. If gold hits $6,000 and the ratio compresses to 20 to 1, silver goes to $300. That's not fantasy. That's basic math based on patterns that have played out multiple times. The inventory collapse. Go to Google right now, search COMEX Silver Inventory 2026. Look at that chart. See that cliff? In June 2025, COMEX had 86 million ounces of deliverable silver. Today, 28.4 million ounces. That's a 67% drop in 7 months. 2/3 of the deliverable silver vanished. But here's the crazy part. There are 935 million ounces of paper silver contracts on COMEX. That's 33 paper claims for every 1 real ounce. Imagine selling 33 concert tickets for every seat. What happens when everyone shows up? Chaos. And the chaos is starting. Silver lease rates just spiked to 8%. That hasn't happened since the 1970s. Lease rates are what companies pay to borrow silver. Normally it's under 1%. 8% means companies are desperate for physical metal. They can't find it anywhere. China just changed the game. January 1st, 2026. China restricted silver exports. Only 44 approved companies can now export silver from China. Everyone else is locked out. And those 44 companies need to meet strict requirements, minimum 80 tons annual production, $30 million in credit lines. This instantly blocked hundreds of smaller exporters. Why does this matter? Because China controls global silver refining. They're not just a player, they're the bottleneck, the gatekeeper. And they just decided silver is too important to sell freely to the West. They're calling it a strategic material. Same classification as rare earth minerals that go into missiles and jets. Even Elon Musk noticed. He posted, "This is not good. Silver is needed in many industrial processes. When the richest man on earth is worried about silver supply, maybe pay attention." The U.S. Mint can't keep up January 14th. The U.S. Mint suspended all silver coin sales, not limited, suspended completely. Their reason? Rapidly rising silver prices have made it impossible to accurately price products. The United States government can't sell its own silver coins because the price is moving too fast. Let that sink in. The Royal Mint in the UK is sold out too. 2 of the most powerful governments on earth can't supply silver to their citizens. Does that sound like normal supply and demand to you? The demand side explosion. Solar panels consumed 200 million ounces of silver last year. By 2028, that number hits 350 million ounces. That's a 75% increase in 3 years. Electric vehicles use 50 grams of silver per car, double what gas cars use. As EV production scales, silver demand explodes. 5G towers need silver, AI data centers need silver, medical devices need silver, semiconductors need silver, every major tech trend runs on silver. And here's the problem nobody's solved. For 5 straight years, silver demand has exceeded silver supply. The cumulative shortage since 2021 is 820 million ounces. That's almost an entire year of global production that vanished and never got replaced. The 2025 deficit was the largest ever recorded, 295 million ounces short. The supply problem. You can't just mine more silver because prices go up. 75-80% of silver comes as a byproduct of copper, zinc, and lead mining. Silver miners can't increase production just because silver prices are high. New mines take 8 to 12 years to develop. From discovery to production is nearly a decade. There's no cavalry coming. The shortage is structural, and it's getting worse every year. The 90-day window, the Fed's Reserve Management Purchase Program, runs through April 2026. That's 90 days of guaranteed money creation. $45 billion per month. Published policy. After April, everything changes. Jerome Powell's term ends in May. A new Fed chair comes in. Nobody knows what happens next. This 90-day window might be the last predictable period before massive uncertainty. Central banks bought more gold in the last 3 years than any period in history. China, Russia, India, Turkey, Poland, all stacking hard assets. Silver ETF inflows hit records in 2025. Institutional money is pouring in. COMEX inventory keeps draining. Somebody's taking delivery and not giving it back. The price targets. Citi called for $110. We blew past it. Goldman called for $85, $100. Past that too. The aggressive analysts are now calling $150 base case, $200 if supply crunch is harder, $300 plus if the paper market breaks. Ed Yardeni raised his gold target to $6,000. If gold hits that and the silver ratio normalizes, you're looking at $200 minimum. Some think the ratio could hit 15 to 1 like it did in 1980. At 15 to 1 with $6,000 gold, silver goes to $400. The risks. Listen, I'm not a financial advisor. This isn't financial advice. Silver is volatile. Prices can crash. If the Fed reverses course and hikes rates aggressively, silver could pull back. If a major recession destroys industrial demand, silver could suffer. There are real risks. Do your own research. Make your own decisions. But here's what we know for sure. The Fed is printing $45 billion monthly through April. That's fact. China restricted silver exports January 1st. That's fact. The U.S. Mint suspended sales January 14th. That's fact. COMEX inventory dropped 67% in 7 months. That's fact. Lease rates spiked to 8%. That's fact. Industrial demand is at record highs. That's fact. Supply deficits are the worst in history. That's fact. Every single data point is bullish for silver. The reality. In 1980, silver went from $6 to $50 in 12 months. That was a 733% gain. Adjusted for all the money printed since then, that $50 peak would be over $350 in today's dollars. We're at 115. Even after a 283% gain, silver might still be dramatically undervalued compared to previous peaks, and the setup today is better than 1980. Back then it was the Hunt brothers trying to corner the market, artificial, unsustainable. Today, it's structural industrial demand from the green energy transition, solar panels, EVs, AI infrastructure, 5G. That demand isn't going away, it's accelerating. In 1980, Paul Volcker crushed the rally by hiking rates to 20%. Today, with $38 trillion in national debt, can the Fed really do that? The interest payments alone would consume the entire budget. The Fed is trapped. They can't raise rates high enough to crush this rally without destroying the system, which means they have to keep printing. And every dollar they print fuels the silver rocket. The choice. 5 years from now, you'll look back at this moment. Either you'll say this was when it clicked, when you understood the relationship between money printing and precious metals, when you positioned yourself correctly, or you'll say you saw all the signs, you understood the thesis, but you didn't act. And silver went to $200 while you sat on the sidelines. The Fed made their move at 9 a.m. this morning. China made their move January 1st. The U.S. Mint made their move January 14th. What's your move? Drop silver rocket in the comments if you're bullish after watching this. Share this with one person who needs to see it, that friend asking about silver, that family member keeping everything in a savings account earning 4%. They'll thank you later. Subscribe for daily breakdowns of what mainstream media completely ignores. The Fed is printing billions every day. That's not stopping, which means the silver rocket isn't stopping either. This is just the beginning. Stay sharp, stay ahead.